And of course, we have some more recent examples. We don't need to whatever cherry pick anything, but just to give you like a little bit more recent one, we did like, what was it, 5 days in a row in April, whatever. Now it's more a little bit of a recent example, but anyways, you can take any day of any month of any year, whatever you want. Obviously, you will see that the moment you do the task, it's always the same stuff. Okay, let's just choose this one from the 22nd of June 2022. Right, of course, always the same stuff as we do. We know the day begins here and obviously ended somewhere in here. London close, right? You should already know that. Time windows, time windows, time windows, and in between, right? Perfect. Okay, so what do we do? Of course, and the first step is always, you should know it as your inner step of your pocket, or whatever you say that in English, right? Of course, we show the build-ups and notice already, what a coincidence that it only happened to the absolute minute in London Open. What a surprise, right? So where are the build-ups? Train your eye properly for it, okay, and boom. Okay, so we have this lovely channel build-up, sideways action, equal highs, equal lows, another big time channel inside this channel. Okay, so you should know what this is. And of course, this one is not the nicest build-up, so we don't need to mock it up for argument's sake, but you should see that still in your eyes. All right, and then we have this lovely build-up, sideways action, another channel build-up, and another channel build-up here. So you already can see these channel build-ups are most likely the most important ones you should focus on, right? Because they will also have a huge role for your ongoing journey right away. Okay, so next, of course, after the build-ups, we have to train our eye for seeing the inducements. So where are the inducements? Boom, we're adding a new factory to it or a new machine to it, right? And we already can see channel build-up getting induced to the high side. That's the structure point that gets induced. This build-up in here getting induced to the low side, but also creates this new channel and is also a shallow. And of course, this one stays inside the channel, fakes the break of structure to the high side, right? All the Koch traders, change of characteristics, they're getting excited about it. But of course, we see this is the inducement of what? Of this channel right here, right? Then of course, we have our main inducement for the day, but of course it's just a minor one if you don't look to the left, if anything is getting induced here, right? Also can be mitigation, but we will dig into that very soon. Then we have this channel build-up, sideways action getting induced, both the sideways action and this channel getting induced with this one. So this is a very juicy one, right? Next channel, what is this? Vector candles. And we had some juicy target to the left also. Of course, we don't see it here, but just trust me on that one. And this becomes a medium one. And of course, gets ended off with the vector candles, right? And the timing, of course, is also very juicy. But we will, of course, dig into that also. Then next build up, inducement to the high side. That's the structure point gets induced. And of course, it can go lower. Perfect stuff. So next things, relevant break of structures after the inducement. Next machine appearing, the relevant market structure breaks, inducement high, getting broken here very late though, right? But just technically just in here, right? Or depending of, sometimes again, this is also a very good rule. Sometimes if it doesn't break properly but creates these equal lows, that sometimes is even nicer because of course it builds up liquidity. Support traders, they want to see that going on from there on, right? And of course, this one acts then as our proper target. So sometimes these equal lows can be even nicer than structure breaks, okay? So just a quick hint right away. This inducement, of course, this is the push, led to inducement, but then, yes, it becomes valid until here, until when? Until it induces this channel with our main inducement for the day at London Open to the absolute minute, 5 minutes off, right? And of course, this zone becomes a smart money trap later on, right? Because the cycle is completed, the main cycle is completed for the day, and we're of course looking for upsides. But yes, if it breaks the structure here, didn't take out this one, comes back here, this gets valid, but obviously later on, no. Okay, then we have this push in here that led to the main inducement for the day, and of course everything in between here would be juicy entry opportunities, and then we can trade the order flow later on, right? But this also builds up the next channel, so we have to be aware that it will get induced at some point. Sideways action getting induced. Then again on the 1 minute it was very clean. On the 5 it more creates like equal highs, and then of course taps into this zone. We should know already what this is, and then tubes away, builds the next channel, vector candle, next channel getting induced to the high side. Here's the next structure break, activates what? The zone. Right, perfect. So with that being said, what's the next step? Mitigation, boom, and there we have them all, right? So we had this proper mitigation zone after the break of, oh, technically after the equal lows being formed, right? So very nice trade actually into the inducement low, right? Then we had this zone which got invalidated later, obviously, from smart money trap. Then, okay, technically how you see this, if you understand this inducement, right here of the channel into a mitigation zone, that's also a possible trade you can take, but obviously we'll dig into that way later, right? Then we had our main inducement, break of structure, so unfortunately no clean mitigation zone on the 5, obviously something on the 1 minute going on in here and here and here, right? Perfect. And then we had this Mona trade in here, Mona Lisa shit, inducing the channel, inducing the equal lows, equal highs, right? Perfect, into this mitigation zone, also the inducement of the channel, perfect. And then if you don't like this one, you wait for the internal break of structures into the mitigation, boom, out of it. Then of course for the more advanced traders later on, this is something we take all the time, right? When you have this extreme, after the vector candle, the whole cycle is confirmed, just screaming it's done, right? Then of course you look for the lower time frames and it taps back into the extreme and you trade away from the medium inducement as always. And then this minor cycle play, build up, inducement, break of structure, and unfortunately never tapped in here. That would be also proper scaling, but it's very late anyway, so probably staying away from that. So that's the basic simplicity approach for now. So let's give me a quick summary so you understand it properly. So we had the extended liquidity inducement cycle. We always have to start with the build-up, creates liquidity and gives retail traders reasons to open their position. So everyone should be at the stage of understanding, oh, these retail strategies, they're getting built up on purpose, right? And obviously reasons being created for these retailers to taking positions and obviously to place the stop losses at some points. And then of course they're getting what? Induced. So the last impulse to either stop retailers out of their positions already took with the build-up, or is the last impulse to take a trade and open positions. Like if it's with speed, momentum, like momentum traders, trend traders, breakout traders, they're all getting induced into the positions of the inducement. But of course, these people are getting tagged into there, already opened the positions, they're getting stopped out. So the inducement obviously has two needs for them, getting people out of it and getting people in of it, right? Then, of course, the relevant market structure break, that always be optional. Again, it's not necessary. That's why we had the first build-up inducement mitigation stages, right? Because sometimes you just don't get a relevant break of market structure, or it will be very late and you don't get a proper zone. So that will always be optional. But for the simplicity approach, you should look for it because it gives you the proper step-by-step guidance to follow something without making anything up. And then last but not least, for this extended lit cycle is of course the mitigation, and that always fills the imbalance, sometimes just a normal supply and demand areas. So imbalance is of course not always the case, but on the lower time frame should be definitely there. But the moment you get really used to it, you also can see the supply and demand zones without the proper imbalance zone. But the imbalances is of course better because they have to fill these imbalance zones anyways, and not only go back to supply and demand areas. And then of course the cycle repeats, and it's all over and over and over again. It's like this infinity loop, this flywheel that speeds itself up and is ongoing literally everywhere, like on a 1 minute and 5 minute, 50 minute. But of course we focus mainly on it on the 5 minute, because as you did see, early on, we can see the perfect full day on the M5 from start to end. So that's why the M5 is the absolute Mona Lisa time frame to make our analysis. And then, of course, later on, we can add higher time frames as well. But for the simplicity cycle, for the extended LIT cycle, always stick to the M5. So the simplicity approach checklist though, right? So you can write that down or whatever, make a screenshot if you can, because it should be blacked out somehow. But best is anyways to take notes. Handwritten notes are the most efficient ways to learn stuff, because you write stuff down and not only seeing it and hearing it, but you actually use your hands and write stuff. That's the most efficient way anyways. And as you already can see, we only are at stage 4 for the overall simplicity approach checklist. So already seems pretty damn good, but we still have another 4 steps to go. And you will realize it's only the first part of it. How crazy is that, right? So we write here part 1 of our beautiful factory approach. And guess what? We will complete the whole factory very soon in part 2 in week 3. And of course, we'll show you all the other steps to simplicity approach, and you will absolutely be blown away. But already you can see of how crazy clean it can be, of how structured trading can become, and how clearly you can see it. Isn't that freaking crazy? Think about it. It's week 2 and you already see how the market works. Isn't that insane? So week 3, we will finish, of course, most of the simplicity approach, and then we will finish it off in week 4. And yeah, it is a hell of a journey ahead. For now, get really used to it. Like, get the build-up done properly, see the inducements, get used to these relevant breakout structures, and see of how to tap into mitigation, or sometimes even stay away from the mitigation. But at least you have the eyes for it, the visual eyes for it, to see what's going on there, and then we can build upon that. So do a lot of practice on the build-up, because again, everything starts with the build-up. The whole machine starts with the build-up, right? And that has to be your focus. You have to identify the build-up and see it from 50 miles away. That's why we give you so many examples of it, so you really get used to it. Because you get the build-ups wrong, the chances are that you get the inducements also wrong. Okay, so train your eyes and make a shitload of tasks of identifying the build-up, and you will have a solid foundation moving on. So now do your tasks about finding the build-up, inducement, breakout structures, and mitigations. Have fun, learn a lot, and we will catch up in the next topic.